Good morning, ladies and gentlemen. I'm Thibault de Barcy from the Payments Association EU, and I'm here with my good friend, Tony Craddock, founder of the Payments Association in London. Good morning, Tony.
Thibault, good morning. Good to see you here.
I think today we are going to talk about the evolution of the payments industry in the UK and in the EU, and so this will be a little dialogue between you and me, Tony. So, Tony, let's start with on a good note, is that we can say that UK opened the way in terms of the evolution of payments. You guys came up with open banking, with fast payments, but that was already a few years ago. So, Tony, I'm asking, how's the landscape in the UK today?
So, sometimes the people who are first are not the winners. And I think what's interesting is seeing how different markets have evolved in recognition of the things that we've laid down in terms of regulation and standards, sometimes to go beyond where we currently are. So the answer to your question is things are thriving, they're healthy, they're vibrant in the UK. Are they as progressive, as early stage, as ahead of the curve as perhaps they used to be? I think that's in question. So while we like to see ourselves, I say the UK market likes to see itself as leading in this amazingly vibrant industry, on occasions I'm concerned because of various internal political factors that suggest that in fact we're not as far ahead as perhaps we used to be.
And well, I think the idea is that we know that in the European Union, everything starts and ends with a regulation, as it was the case in the UK as well. So just to give you a little status update on the European Union here, of course, we are living under PSD2, as you were, and the European Commission this summer started a consultation on the revision of PSD2, preparing therefore PSD3. There is another consultation on open finance, opening the way. We also know that the Commission is preparing a legislation on the access of instant payments because they are not too happy about the way it is proposed today in the EU. And then, of course, we have a fourth stream, which is the whole stream on data. I mean, the successors of GDPR and such, which, of course, is extremely important in payments. By the way, about regulation, Tony, I know you'll be there, but we are organizing a conference with José Manuel Campa, the head of the European Banking Authority in Madrid on October 14. So I would like to mention this for those who are interested. But to you, Tony, on regulation, what's the status in the UK then?
So the thing we sometimes forget is that regulation is not created in isolation. It's a result of a series of interest groups making representation to politicians. Those politicians could be in the European Parliament or they could be in a local parliament. What has happened since we made the rather bizarre decision politically to leave the EU, and I still think it is bizarre, what has happened is we have adhered pretty strictly to the European way of doing things. Because, let's be honest, GDPR, good regulation, PSD1 and 2, good regulation. So the question is what happens from now onwards? And I think if we look at the political backdrop here, and this is something that I think is relevant to everybody within the EU, is that there is a new, there's a new king, which we're all quite happy with, sad by and happy with, but also we have a new prime minister, and the new prime minister has got in on a pretty right-wing agenda, which is all about burning the bonfires of regulation. And I think what we're going to see is an increasingly unleashed financial services industry, which is able to capitalize on not only the desire to protect consumers, but the need to promote competition, which enables innovation, which results in growth. So, Thibault, I think that our ability to adhere to and our willingness to adhere to the current regulatory framework within the EU is absolutely there. However, I would not be surprised if there became a very gentle move away from the EU frameworks.
And maybe an additional question, Tony, on the infrastructure, because again, I think that the whole fast payment infrastructure is getting revised, correct?
Yes, there's something called the new payments architecture, which is a bit of a misnomer because it was designed 6 years ago. There's currently the people who own faster payments, the Pay.UK as it's referred to, or Pay UK. A couple of years ago, put out an invitation to tender, and there's a range of different organisations that are submitting their responses. There's a couple of big players involved, one from outside the UK, one from within the UK. And it's quite exciting to see who's going to win this tender, because what that will enable is not only faster payments, which is instant, very low cost and secure, faster, instant payments, but also the ability to integrate freely and in an efficient way with international payments networks and countries, but also in a way that adds value in terms of data and other value-added services. So we think that should this be adopted, and I think it will be market-changing in the UK, until, of course, the next thing comes along, which is likely to be stablecoin-based or digital currency-based enabled payments.
We'll come to that later, but maybe talking about a few innovations in payment lately. Of course, there is much talk about buy now, pay later, right? And of course, we know that some market valuation have been severely corrected during the summer. But anyway, the service is still quite popular, right, Tony?
Yeah, it's very popular, and about a third of the consumers think of it as being just simply another way of using their credit cards. And to some extent it is. The difficulty is it's not as transparent and obvious as to what the implications of buying now, paying later actually are. I've taken out a few of these contracts myself, and I know their contracts, and I know I have an obligation to repay. An awful lot of people absolutely max out on their credit card limit each month to enable them to pay later for a portion of their purchases. One of the reasons why the valuations from organizations such as Klarna have absolutely collapsed by 80% or so is because the regulators have finally said, look, this is kind of not transparent, it's not open, it's not clear, and it's not necessarily in the interest of consumers. So the regulators are coming in, they're putting in place new restrictions that will ensure that consumers are absolutely protected as far as they can be. So the BNP bubble hasn't burst, but certainly the heyday has passed. And I think we're going to be in with a very interesting set of market valuations in the next 2 or 3 years in light of the new regulations.
Yeah, plus with rising interest rates, the installments proposed by Buy Now Pay Later might not be free or entirely interest-free in the future. Just a note on regulation on the EU side, there is a coming directive on credit in general, and apparently Buy Now Pay Later will be included as part of this regulation, so to be regulated in the EU. I propose we switch to another innovative topic, which is, of course, cryptocurrencies being used in payments. I was reading in a paper that was published with the papers in Amsterdam that now the payments made with cryptocurrencies is only, of course, a tiny fraction of the global payment markets. But of course, everyone is betting on probably an increased market share as a mean of payment. What do you think, Tony?
So the underlying technology is very different to how people are going to use it. And I do not believe that people will be using the ability to transfer your fiat value into cryptocurrency and back into fiat is going to be used for very much other than money laundering or anonymity purposes. But what we see increasingly is a recognition that there is an application of the underlying technology, which could really be very useful. And I'm speaking at a conference in Athens tomorrow about how stablecoins could well become the new e-money. And as you know, the e-money industry has been a great success. It was founded in 2003 with the first e-money directive, then adopted within a part of PSD1 and then 2. It's got 300 organizations around Europe who issue e-money. And billions of euros have been transacted using e-money. It's been a great problem solver for a whole lot of people who want to move money. What I think we're going to see stablecoins as being is, if you like, the next generation of e-money. So rather than thinking that's fancy crypto stuff and I should not be thinking about it, we should and not thinking this is a central bank digital currency, Thibaut, we should think, how is this the next generation of e-money?
Yes, and about CBDC, there was a very interesting announcement here in the EU by the ECB, the European Central Bank, yesterday. So they have selected 5 companies to start a project on digital euro, and it's interesting the way they have segmented it. So we have peer-to-peer online payments given to CaixaBank in Spain, peer-to-peer offline payments given to Worldline, point of sales payments initiated by the payer with EPI, which is the European Payment Initiative, which was not in great shape those last months. And then we have point of sale payments with Nexi, and last but not least, e-commerce payments with Amazon. So that is finally, because the digital euro project was considered to be quite blurry. So now we see something which is very practical with those 5 companies selected for five use cases. So I think that's we are living in a very interesting times indeed.
I agree completely, and to me, so much of this is about finding an application, piloting, testing it out, learning, and seeing what it actually means in practice. Because, as we all know, the best of plans laid on a business, on an Excel spreadsheet, when you actually put them in the market and try and get people to change their behavior, it's another thing altogether.
Excellent. So the last section of our little talk, Tony, is more about consolidation and evolution of the markets on both sides of the channel. On the European side, we have definitely seen a lot of new players after PSD2, after PSD1, then PSD2. And apparently many new coming unicorns, even despite the market correction this summer. And in a recent white paper we did with the papers, key players in the EU, we have written in the conclusion that the rate at which unicorns are appearing in Europe is now twice the rate that is measured in the USA, which is excellent news for European business in general. But of course, everyone is speculating on mergers and potential players which might be absorbed by their bigger competitors. I guess you see the same thing on the UK, or what's your view in general, Tony?
Yeah, I think we're seeing there's a lake of money out there. There's not a pond or a stream. There's a lake of money out there, but it's becoming increasingly cautious about where it puts where it places its bets. I think organizations that decide to do a wrap up of distressed payments assets will do very nicely. I think organizations that can cherry pick neat, profitable businesses that complement their own, perhaps vertically or horizontally integrating, will also do very well. We're going to see a fair number of organizations who, sadly, have founders who started them and are unable to actually exit with the dream ticket. And I'm also expecting to see that those organizations that have proven themselves able to have a good cash runway and a strong underlying profitable revenue source will be the winners, often the niche ones. But you know what? We're in a time where we've never been like this in our industry before. It's been boom, boom, boom. I'm delighted to hear what you say about fintechs coming through and more unicorns happening. But I think it could well be because of consolidation, bringing together a range of different assets that complement each other, that will allow there's a selective number of unicorns to romp down to the winning post.
And then obviously another point on the European side is how can you become a truly European player at the size of the continent? And then obviously we have this great system which is passporting, which was meant to achieve that. But of course, many companies who would like to accelerate their growth or their geographical footprint will probably prefer to do it via acquisitions and therefore have a European footprint thanks to the integration of those various local companies. Maybe a word to conclude on my side. The speed at which instant payment is getting offered in Europe is quite impressive, and it will, of course, it is sustained by infrastructure that is there. It is sustained by a common standard, which is SCT Inst. And I think we will see many progresses in the coming months, especially if it is being accelerated by a new legislation on access. So I will conclude on that for the European side. A word of conclusion on your side, Tony?
So it's a rather scary thought for most payments companies that the pace of innovation at the moment is so rapid that I think many companies that are in existence now will not exist in 5 years' time. We could be looking at a contraction of the industry of maybe 50%. But what I'm also confident about is that if those organizations that are out there that are prepared to innovate, to take account of the new technologies, the new products and the new capabilities, that they themselves will then build another 50%. So our industry overall is even bigger than it is now. So I'm forecasting a significant volume of redundancies in terms of companies, but a significant growth in new players.
Thank you so much, Tony. This concludes our little session this morning. And I'm now giving the word to Sean Byrne, Vice President, CEO, PayPal Europe, PayPal, which is a happy member of the Payments Association EU. Thank you very much. Bye-bye.